We are going straight into the source material today for another session of, well, rock-solid insurance talk. And we're going to build you a shortcut to being truly informed about a specific, very high-stakes topic.
We're talking about the New York City restaurant industry. It's just this incredible tapestry of flavor and culture and, relentless energy.
It really is.
But behind every successful launch, every packed dining room, and every single five-star review, there is a dense, really intricate web of risks.
Absolutely. The margin for error here it's just razor thin. So our mission today is to move past all the generic advice.
Right.
We want to pinpoint the exact insurance coverages you need to safeguard a thriving modern food business. And we're going to use a brilliant case study, Khaosan, a popular Thai restaurant in Brooklyn, and its owner, Amita.
Amita's operation is, it's the perfect illustration of how modern business complexity drives the need for insurance. Having the right coverage isn't just about, regulatory compliance.
Especially not in New York State.
No. It's a foundational strategic asset. It shields the massive investment you need to succeed, and it lets owners focus on growth and creativity, not the fear of some financial catastrophe.
Okay, so let's unpack this. Let's dive into the complex risk profile of a modern NYC eatery. Because Khaosan is not just a simple mom-and-pop shop.
Not at all. It's a sophisticated revenue machine. And the moment you start diversifying how you make money, you just drastically change your vulnerabilities.
That's the key insight, right?
That's the core of it, yeah. When you analyze Khaosan, you realize Amita's running at least 4 separate operations under one roof.
Okay.
First, you've got the high-volume, packed dine-in service lunch and dinner are booming.
Okay.
Second, the source material points out that online orders are a massive, necessary part of their business now.
Which introduces a whole world of digital risk.
A whole world of it, yeah.
Yeah.
Payment processing, data risk, you name it.
And crucially, she's controlling the process herself. She isn't just relying on third-party apps for everything. They handle their own local deliveries.
With their own staff members.
Using their own personal cars. And I have a feeling that move, while great for the customer experience, is one of the biggest hidden liability traps we're going to talk about.
Oh, it's a huge one. And finally, they're leveraging their reputation. They participate in major off-site catering and food events.
Like what?
Well, the sources mention high-profile gatherings like the Thai Select Festival or Pig Week on Staten Island. Every time they step outside their Brooklyn spot, the risk profile completely changes.
So the insurance has to follow the business.
It has to follow the business.
Okay, so let's just look at that whole picture. You have dine-in, online orders, personal cars for delivery, high-profile events. You're staring down risks across the entire spectrum.
Massive inventory spoilage if the power goes out, high-stakes liability claims from the bar, major financial exposure from staff using their own cars.
And even just the operational drain from digital payment disputes. It sounds overwhelming if you don't have a plan.
It is. And that's why Khaosan needs insurance that is far more comprehensive than a standard, off-the-shelf commercial policy. You have to anticipate where the gaps are.
Because the insurance company certainly will if there's a claim.
They absolutely will.
Which brings us to the segment I think everyone needs to hear, unpacking the critical gaps. These are the specific, often overlooked policies that turn a potential catastrophe into just a manageable incident.
Right.
Let's start with Amita's single biggest operational fare.
Her biggest worry, and this is cited directly from the sources, is the walk-in freezer failing.
Okay, the freezer.
Yeah, and this is a very specific high-stakes risk for her business because of their commitment to authenticity.
Tell us more about that. Why is it so high stakes?
Well, Khaosan imports a lot of specific rare ingredients directly from Thailand to maintain the integrity of their menu.
Got it.
So if that compressor fails during a heat wave, it's not just the cost of, some replacement cilantro. It means pulling their signature dishes off the menu.
The dishes people travel across the city for.
Exactly. And they're off the menu until they can restock those specialty imported ingredients. It hits their identity, their reputation, their revenue for weeks.
So the cost of the lost food is just the tip of the iceberg. The real loss is the interruption of the businesses.
Yeah.
It's very reason for existing.
Precisely. The fix here is something called equipment breakdown and spoilage coverage. It's typically an inexpensive, but, a vital add-on.
And what does it do?
It covers 2 essential things. First, the cost of repairing the equipment, that faulty compressor. And second, it reimburses the business for the full value of the lost inventory.
Turning a catastrophe into a manageable incident.
That's the goal. You're protecting the raw materials of the business's soul.
Okay, manageable incident 1 is solved. Let's move to risk 2. the popular bar program. Amita's team is serving amazing signature cocktails, which is a great revenue generator, but
it opens the door to massive liability.
right. The risk of something happening after patrons leave the building.
And this is where New York's strict, and I mean strict, dram shop laws come into sharp focus. These laws hold establishments accountable, sometimes far more than the patron themselves.
For what happens when they're overserved.
Exactly. If a customer is overserved and then injures themselves, or worse, somebody else, the business is held responsible for the foreseeable consequences.
But doesn't general liability cover this? I mean, it covers general negligence, right?
It absolutely does not. And this is the trap so many owners fall into. Standard general liability policies almost universally have an exclusion for alcohol-related claims.
Why is that?
Because serving alcohol is considered an intentional, high-risk, specialized activity. The insurer views it as a predictable exposure that's sent. Well, that needs its own policy.
So if a patron leaves Khaosan after being overserved and causes a serious car accident, we are talking about multi-million-dollar exposure landing directly on Amita's business.
That is exactly what we're talking about.
How do you even justify that premium?
You justify it by looking at the cost of one single lawsuit. Dram shop claims can involve personal injury, wrongful death, punitive damages. A New York court can award settlements that would just dwarf a standard liability plan. A dedicated liquor liability policy is essential.
It's high-stakes protection.
It's protection against a liability that could otherwise bankrupt the entire operation.
That really makes the cost feel negligible in comparison. Okay, so now that we've protected the physical space and the drinks served inside, we have to talk about what happens when the operation leaves those four walls.
Starting with those local deliveries.
Here is the big aha moment for so many listeners: the delivery gap.
This is truly critical. So, Khaosan uses servers driving their own personal cars. Most owners assume, and it's a reasonable assumption, that the server's own auto insurance covers them.
But it doesn't.
That assumption is fatally flawed.
Why? I mean, if I crash my car, my insurance pays.
Only if you were driving for personal use. The second an employee uses their personal car for a profit-generating commercial activity like delivering pad CU for pay, they cross a threshold.
A commercial threshold.
Exactly. Insurance companies call this a business use exclusion, and it immediately voids the personal policy. They will deny the claim instantly.
Which means, if that server is at fault in a serious accident, the liability doesn't just fall back on them. The deep pockets being targeted are Khaosan's.
Precisely. The injured party's attorney will sue Khaosan, the employer, for negligence. The required protection here is hired and non-owned auto insurance, or HNOA.
Okay, HNOA, what does that cover?
Now, this is important. It doesn't cover the server's car damage. What it does is protect the business Khaosan from the liability claims if the employee is found at fault during that delivery run.
If you run your own delivery in a dense, litigious city like New York,
HNOA is not optional. It is mandatory operational safety.
that distinction is key. It protects the business from the employee's negligence, not the employee's car. Okay, finally, let's talk digital risk. Amita has a huge volume of online orders.
Which brings the infuriating issue of credit card chargebacks.
When customers dispute charges, sometimes fraudulently, demanding their money back, it's a logistical nightmare.
And it takes staff time, legal resources, and it often results in lost revenue. What's fascinating is how the tools to protect against this have broadened. We used to think of cyber liability insurance as only for, massive data breaches.
Right, stealing thousands of credit card numbers.
Exactly. But its scope has expanded so much.
So what does cyber liability cover today for a restaurant like this?
It covers the smaller, more persistent digital risks they face daily. Specifically, it can help cover the costs and the lost revenue from fighting those fraudulent chargebacks and payment card disputes.
So it's like an internal accounting safeguard.
In a way, yes. It manages the operational drain caused by online dishonesty.
Now that is truly building a custom safety net. We've covered the specialized add-ons, but those policies have to sit on a strong base. Let's quickly review the essential foundations for Amita's rock-solid protection plan.
Okay, we start with the mandatory policies, the ones tied to the physical establishment itself. First, commercial property insurance.
And this shields the enormous financial commitment of the restaurant space.
Right. In NYC, that's not just the building. It's the expensive kitchen equipment, the unique fixtures, the elegant decor that Khaosan invested in. It protects against fire, theft, that sort of thing.
And second, the non-negotiable defense layer, general liability insurance.
Especially in a city as dense and, litigious as New York, This is your primary safeguard.
The classic slip and fall.
Exactly. General liability protects against third-party bodily injury claims, like a customer slipping on a wet floor, or property damage claims. The limits on this policy need to be substantial.
Next up, you have to protect the people. Amita has a team of 20, and in New York, this is legally mandated.
Correct. Workers' compensation insurance. It covers medical costs and lost wages for employees injured while working. A minor kitchen burn, a strain from heavy lifting,
Or an injury during a delivery run.
or an injury during a delivery run. It is essential for every single employee in New York State.
And since we've established that Khaosan's business goes beyond the four walls of their Brooklyn location,
The Thai Select Festival, Pig Week.
we need to talk about covering those off-site activities.
You cannot assume your standard general liability policy just follows you to a festival booth. It doesn't work that way. You need an explicit endorsement or a separate event and catering insurance policy.
So the liability follows your business wherever it operates.
It has to. This ensures protection whether someone slips in your dining room or trips over a tent stake at your booth during Pig Week.
And finally, there's that ultimate extra cushion, the thing that provides financial peace of mind as the business grows.
That's the commercial umbrella insurance. Think of it as the ultimate layer of catastrophic defense. It provides an additional layer of liability coverage, often in millions of dollars, above the limits of all those primary policies we just discussed.
So it sits on top of the general liability, the liquor liability, the HNOA.
All of them. If a major catastrophic claim, like a severe Dram shop case or a delivery accident, exceeds the limits of the underlying policy, the umbrella policy steps in to prevent the business itself from collapsing. It protects the legacy.
So what does this all mean for you, the listener, especially if you run a complex business? The core message seems pretty clear. Achieving rock-solid protection isn't about buying a generic product off the shelf.
Not at all. It's about building a bespoke safety net that's tailored to every single unique risk stream your business creates.
We can probably distill this into a few key takeaways from Amita's case.
I think 5 key takeaways really sums it up.
Okay, number 1, start with the foundational basics, but make sure the limits are high enough for the New York market. So general liability and property are non-negotiable.
Number 2, customize your coverage based on your operational reality. If you deliver, you need HNOA. If you serve cocktails, you absolutely need liquor liability. If you cater, you need that event endorsement.
Number 3, protect your people. Always. Workers' compensation is mandatory, and it ensures your team is fully covered.
Number 4, plan for the unexpected risks that are unique to food service. You can't ignore spoilage coverage, equipment breakdown, or the growing threat of cyber liability.
And number 5, think beyond your walls. Make sure your policy explicitly covers any and all off-premise activities, whether it's a quick delivery or a big festival appearance.
By strategically managing these risks, you safeguard your massive investment. And I think most importantly, you empower yourself to keep sharing your passion with the world without fear.
And that leads us to our final provocative thought for you to chew on. Think about that spoilage risk we discussed, the walk-in freezer.
Right.
That risk exists because Amita imports specific, hard-to-find ingredients from Thailand. That sourcing strategy is the heart of Khaosan's unique identity and its success. So that single policy equipment breakdown and spoilage coverage, it doesn't just protect the dollar value of the inventory, it protects the entire culinary passion and the very reputation of the business.
When you realize that a properly constructed insurance plan protects the intangible soul and identity of the business, not just the physical assets, you really understand its true value as a strategic asset.
Absolutely. Apply that lens to your own areas of operation. See where your foundational passions intersect with your biggest risks. Thanks for joining us for this deep dive into rock-solid protection.
Thanks for listening.
We'll see you next time.
Thanks for tuning in. Running a restaurant isn't easy, and the right insurance can make all the difference. If you want clearer coverage, better protection, or a customized policy for your restaurant, Blue Rock Insurance Services is here to help. Reach out today and let us protect the business you've worked so hard to build. See you next time.